Morning viewers, I'm Greg McKenna and here's Thursday morning market wrap. It's been a bit of a dull night unless you're trading oil or the Canadian dollar. Oil fell another 2.3, 2.4%. That brings the fall for the week down to 4.3% and it's off more than 11% from its high of earlier this month. Oil's come under pressure this week because OPEC kicked a little bit of an own goal, I guess, earlier. When they asked Iran to wind back the spigot and stop pumping out so much oil. That really got people thinking, well, okay, this demand-supply balance or imbalance is going to continue into 2016. And then, of course, last night, the EIA released the latest inventories for the US. It was a massive build again, 15 million barrels in the last 2 weeks was the build, and the build last night was around double. Pardon me, around double what the market expected. So it was natural that people hit the sell button. And we've got the price of oil down here at 45.20. If we have a quick look at the chart, let's just have a quick look at that one. So if we have a quick look at the chart of oil, this is in MT4 terms, don't forget. I haven't had a chance to change my colors just yet. We've obviously had this big sell-off. Then we've had this rally. I was characterizing it as a box, but then we broke out. So we've had this uptrend. And you can argue about the efficacy of the uptrend, but I think it's a reasonable one because it's tested both from the top side when it was a rally and the bottom side now that it's been a break. We also had, you can't see it very well there, but that is crude oil one Friday night a couple of weeks back, rejecting the 200-day moving average. It hasn't been above, crude oil in MT4 terms, has not been above the moving average since July 2014, if I remember correctly. What we got here, last 3 days, we've dropped 4.3% roughly. So what we've got is we've got a real sort of setup that looks like it's going to head lower. Now, I'm not overly bearish. You know, my level that I think I talked about yesterday was in that low 44 kind of region. You know, that's around the bottom of the range. That's where support has been since the sell-off recovery range trade. So it seems to me quite reasonable that whatever machinations happen over the next day or so, you will get a test there because the market will want to know if that support at 44 bucks is still solid. So I'm expecting that. Now, obviously, the implications of a weaker oil price, this is the Canadian dollar CAD, I should say, the implications of a weaker oil price is more pressure on the Canadian dollar. What you're looking at here is the weekly dollar CAD chart. And what you've seen is that dollar CAD is within an overall uptrend, has been in another uptrend for the past year or so. Recently, so if I go back to the dailies, recently we've touched the top of that trend line. You know, we've had a couple of multiple goes and then we had this sell-off. And now we're rallying again. The way that I trade it, yesterday was a classic reversal off my fast moving average. If you can see the cursor there, that was a reversal. It found support and now we've rocketed through both. So I'll be buying dips in dollar CAD, you know, back down under 131, you know, down as low as this sort of 130.50, something like that, because it looks to me like we're heading back up here, back up to 133, 134, something like that. So that's the way I'm going to play that. The impact of a weaker oil price and a weaker commodity complex, iron ore was down again. In Dalian terms, it was 365. In US futures terms, just under 47 bucks. That also puts pressure on the Aussie. It's found some support here at 42 bucks. But overall, I think traders are, sorry about that, I think traders are trying to figure out what gives in the Aussie. It's pretty clear to me that the RBA is not going to cut rates on Melbourne Cup Day in a couple of weeks' time. Yesterday we had John Fraser, the Treasury Secretary, the Australian Treasury Secretary, quite upbeat. He's a real straight shooter, a real straight talker, kind of in your Hank Paulson mode. And he said that he thought business conditions were picking up around the economy, and it wasn't just big business; it was all the way down to tradesman level. And you know, if tradesmen are comfortable and happy and buying and spending, then you've got the full spectrum of improved business conditions, which is good for the economy. I would think that the RBA's liaison, they do a liaison work throughout the community. I would think that the RBA's liaison work should have captured that. And if it's captured that, then there's very little chance that the RBA is going to downgrade economic growth expectations, which is what many who believe that the RBA is going to cut rates again, potentially as soon as November, are thinking. Of course, it could be wrong. That's the market, and the RBA is a weird beast. But the Australian economy is nowhere near as weak as many factor in. The Aussie dollar at 72 cents is around 30 cents lower than at the peak. It's off 20% over the last 2 years. It's starting to do its job. John Fraser said that. The Australian Industry Group keeps saying that. So I think Australian economic growth is going to be tepid, but still okay as the domestic economy transitions. So that's by way of discussing what's going to happen with interest rates. So no, that should support the Aussie, but for the moment, we're in a state of flux. We're all waiting on the ECB tonight. It's probably too early for the ECB to cut again, or do more QE, I should say. But Mario Draghi has a great opportunity today to say something about the potential for QE, about the potential for more accommodation should the market need it. Now, on the one hand, you could argue in the 113s, some of that expectation's priced in because we've come back from the 115s, and possibly that's right. But I'd argue if people thought strongly that Draghi was going to hint at QE or that he was going to do something, I don't think people think he is, that we'd be in the 111s or something like that. So from my point of view, if he rules it out of hand, we'll probably rally 100, 120 points. If he makes noises that it's going to happen, I'd be looking for a run down in Euro to 111.20, 111.70, somewhere in that zone. Haven't really talked about stocks, but the S&P continues to struggle in that zone of support we talked about yesterday. If you recall yesterday where I drew the lines on the chart, it hasn't been able to break back inside the trading range that it had for a while. It started to lose momentum. Realistically, on a weekly basis, it should be going higher. But on a daily basis, it's completely lost momentum. You know, it's tried to break back into that old channel and hasn't. So it's only 16 points, but my guesstimate would be that the S&P 500 heads back towards 2000, maybe 1990, somewhere in that zone, and looks for support once again, and we'll see what happens. It's pretty clear that the earnings season over there isn't that exciting. So that's about it for me. Watch China. There's a report in the press, not in the press, in analyst reports, that there's another report by other analysts. It's all Chinese whispers, but that's how markets work sometimes. That wasn't meant to be a pun either. That the government's going to stop supporting the stock market. Now, I'm not convinced by that, but if that does come to pass, then certainly we'll see some weakness in China and some real risk off. Asian emerging market currencies have started to weaken again. The dollar is strengthening against them. So keep an eye on what happens in China today. On the data front, we've got Malcolm Eady from the RBA speaking today. We've got the NAB's quarterly business survey. Look for the CapEx and 12-month expectations of conditions in that. It was done in August, so it won't be as, it'll be relatively strong, maybe not as strong as the monthly surveys. It's got a broader spectrum, but we'll get a really deep dive into what's going on in the Australian economy. Nothing much out tonight. The ECB is the big deal. We've got a raft of kind of second-tier data in the United States. Overall, we're in this period before the end of the month, in this second half, where data's light, and so we've really got to wait for a decent catalyst. ECB is the big one, and you can see what impact central banks have just in the dollar CAD move, where it was below 130 yesterday and it's back above 131 today. So that's it from me. Good trading. Have a great day. It's rainy after the early version of summer we've had here in Port Stephens for the last few days. It's raining and a bit chilly today, so hopefully it's nice where you are. I'm Greg McKenna. You can catch me on Twitter at Gregory McKenna. You can always catch me at Business Insider, and of course you can catch me on my own website, gregmckenna.com.au, where you can get access to Jesse Livermore, to my little ebook on the wisdom of Jesse Livermore, which I'd encourage you all to click. Join my Traders Club. It's free. It'll stay free, and get that ebook. The next one I'm thinking of doing is on Nicholas Darvis, and then after that, I'm probably going to turn Michael Mabussion's Think Twice, which is not a book about trading, but it's one of the best trading books I've ever read, into an ebook. Anyway, have a great day, and I'll catch you tomorrow morning at Friday. I'm Greg McKenna. Bye for now.